Have you ever looked at your bank statement and felt reassured by that number? It feels like your money, safe and waiting for you. But that number isn't a pile of cash, it's a promise from your bank. We trust banks, seeing them as fortresses for our financial lives. We deposit our savings, and, in return, we get a guarantee. Our money is protected. But behind these words is a system more complex and fragile than we realize. This story is about what really happens to your money, and how safe it truly is. We'll skip the jargon and look at the real stories, when promises were tested, and what happened next. What actually happens to your money after you deposit it? What protections are in place if things go wrong? The answers may surprise you. The journey begins with a simple act of faith. You hand over your money and trust the number on the screen. But your money doesn't just sit in a vault, it goes on a journey. It's lent out, invested, and moved around the world in an instant. Along the way, it's exposed to risks you may never have imagined. So let's follow the money and uncover the hidden truth about financial security. Are you ready to see where it leads? Let's begin. The story of your money is about to get real. Picture your local bank, a steel vault, stacks of cash, your money locked away. But that's an illusion. The moment you deposit your money, it becomes part of a giant pool the bank uses. Banks pay you a little interest, then lend your money out at higher rates. Your cash isn't sitting in a vault, it's out in the world, working. This is called fractional reserve banking. Banks keep only a small fraction of deposits as cash. The rest is loaned out. For every $100 deposited, maybe only $10 stays in the bank. The rest is used to create new loans. This is how banks create money. But this system is built on trust. If everyone wants their money back at once, a bank run, the bank can't pay. The doors close, promises break, and the illusion shatters. The system depends on confidence, not cash in a vault. When trust disappears, the consequences are devastating. Your money's safety is more fragile than you think. The vault is just a story we tell ourselves. The real system is built on trust and risk. In 2008, the collapse of Lehman Brothers triggered a global panic. What began as risky home loans bundled into safe investments unraveled fast. When homeowners defaulted, those investments became worthless. Banks worldwide lost billions, and trust evaporated overnight. Banks stopped lending to each other, fearing the next collapse. Credit froze, businesses couldn't get loans, and the economy stalled. For ordinary people, retirement savings vanished, home values crashed, and jobs disappeared. The promise of safety was shattered. The 2008 crisis proved the system was more connected and fragile than anyone realized. One bank's failure threatened them all. The financial web that held everything together nearly came apart. The lesson: the system's strength is also its weakness. When trust breaks, the effects ripple everywhere. The crisis showed how quickly things can fall apart. It was a wake-up call for the world. The story of 2008 is a warning. No bank and no deposit is immune. The system's safety depends on trust, and that trust can vanish overnight. What happened once can happen again. The question is, are we ready next time? When the financial system catches fire, central banks are the firefighters. In the US, it's the Federal Reserve. In Europe, the European Central Bank. Their job: protect the system and act as lender of last resort. In a crisis, they inject new money to keep things moving. In 2008, the Fed lent trillions and bought toxic assets to prevent collapse. Central banks can create money with a keystroke, an immense power, but too much money can cause inflation, eroding savings. Central banks walk a tightrope. Protect the system, but don't encourage reckless risk-taking. Their support is why we haven't seen a total collapse like the 1930s. But this safety net has limits. It can make banks feel invincible, tempting them to take bigger risks. The challenge: how to protect the system without making it more fragile. Central banks are powerful, but not all powerful. Their actions shape the fate of your money. The balance between safety and risk is delicate, and always shifting. Your bank account is insured, in the US, by the FDIC. If your bank fails, the government promises to pay you back, up to $250,000. Banks pay into an insurance fund, which covers depositors if a bank collapses. The goal: prevent panic and bank runs by reassuring people their money is safe. If your bank fails, the FDIC steps in, often transferring your account to a healthy bank. For most, the process is seamless. But the insurance fund is tiny compared to total deposits. It's designed for small failures, not a wave of big ones. If many large banks failed at once, the fund would run dry fast. Then, the government faces tough choices. Deposit insurance is a safety net, but it's not limitless. The system works as long as only a few banks fail at a time. In a true crisis, even insured money could be at risk. The promise is strong, until it's tested. In 2013, Cyprus was rocked by a banking crisis. The country's biggest banks were collapsing under bad loans. To get a bailout, European authorities demanded something shocking. Depositors would help pay for the rescue. The government announced a plan to seize a percentage of every bank account, a bail-in. Banks closed, ATMs emptied, and people's money was frozen. The promise of deposit insurance vanished overnight. After 2 weeks, a deal protected deposits under $100,000. But those with more lost huge sums, some lost everything. Cyprus proved that, in a severe crisis, even insured deposits aren't always safe. The rules can change when the system is overwhelmed. The safety net broke, and trust was shattered. The world took notice. In extreme cases, your money can be used to save the bank. The Cyprus crisis was a warning for everyone. When the system is pushed to the brink, guarantees can disappear. The fear of a bail-in became real. Even the safest-seeming money can be at risk. Bank runs used to mean crowds at the door. Now, it's a tap on your phone. A viral rumor can trigger panic in seconds. In 2023, Silicon Valley Bank collapsed after $42 billion was withdrawn in a single day. Digitally, no lines, no waiting, just instant withdrawals. The speed was unprecedented, and the bank failed almost overnight. Technology makes banking fast and easy, but also more vulnerable to sudden shocks. Regulators struggle to keep up with panics that move at the speed of light. The tools of the past, closing branches, calming crowds, don't work when the bank is in your pocket. The digital age has created a new kind of risk. Confidence can vanish in minutes, not days. The future of banking is faster and more fragile. The digital bank run is here. The question: how do we protect the system now? The answer isn't clear. Today, finance is global. Your bank in Ohio might be linked to a company in Germany, a bank in Japan, and bonds in the US. This web fuels growth but also risk. A crisis in one country can trigger a chain reaction worldwide. The 2008 crisis started in the US, but became a global recession. There's no global central bank or deposit insurance. National safety nets can't always handle global shocks. The system relies on cooperation and trust between countries. But when trust breaks, the whole web is at risk. The financial system is global, but protections are local. What if a crisis is too big for any one country to handle? The ultimate risk: a global breakdown with no one in charge. We're all connected, and that makes us all vulnerable. The web that links us can also unravel. We've uncovered the truth behind the numbers on your bank statement. Your money isn't just sitting in a vault, it's part of a complex, fragile system. Trust holds it all together. Trust in banks, borrowers, central banks, and governments. Each layer of protection is meant to reinforce that trust. But as we've seen, trust can be shattered by bad loans, panic, or a crisis too big to contain. The rules can change, and guarantees can vanish. The system is safer than it was a century ago, but not as safe as you might think. We live in a world of calculated risks and fragile promises. So next time you check your bank balance, ask yourself, is it a fact or just a promise? The answer isn't simple. Safe is a matter of degree. In the end, your money's safety depends on trust, and trust is always at risk. The story of your money is still being written.